Hello, and welcome back to the channel. I'm Algabot, and today we're taking an in-depth, educational look at an expert advisor for MetaTrader 5 called the Adaptive Efficiency Trend Rider. This strategy is built around Kaufman's Adaptive Moving Average, a moving average that speeds up during clean trends and slows down in choppy conditions. Paired with a momentum check from the Relative Strength Index and a volatility-based risk model, it aims to join a trend only after a shallow pullback. By the end of this video, you'll understand exactly how it reads the market, how it enters, and how it manages risk. Let's dive in. So what does this expert advisor actually do? At its heart, the Adaptive Efficiency Trend Rider is a trend-following pullback system. That means it doesn't try to pick tops and bottoms. Instead, it waits for a trend to establish itself, waits for price to pull back toward a key line, and then looks to join the move as price recovers. The engine that makes this adaptive is Kaufman's Adaptive Moving Average, often shortened to comma. A standard moving average always reacts at the same speed. Comma is different. It measures something called the efficiency ratio, which compares how far price has actually traveled against how much back-and-forth movement it took to get there. When price marches cleanly in one direction, the efficiency ratio moves toward 1, and the average reacts quickly to ride the trend. When price is just chopping sideways and going nowhere, the efficiency ratio falls toward 0, and the average slows right down and flattens out. That single behavior is powerful because it naturally quietens the strategy in the ranging conditions where trend pullback systems tend to produce their weakest signals. This one adaptive line does two jobs at once. Its slope tells the strategy which way the trend is leaning, and its actual value becomes the dynamic pullback level that price needs to dip to and then reclaim. On top of that, the strategy adds two supporting tools. The Relative Strength Index acts as a momentum filter, confirming that momentum agrees with the direction of the trade. And the Average True Range, a measure of recent volatility, sets both the protective stop and the profit target, so the risk automatically adapts to how active the market currently is. From an educational standpoint, this approach is aimed at traders who prefer a structured, rules-based method on trending markets, such as major currency pairs, stock indices, and metals, typically viewed on the 15-minute through 4-hour timeframes. It is patient by design. Remember, this is educational information only, not financial advice, and trading always carries the risk of loss. Let's walk through the exact logic, step by step. Everything is evaluated on the bar that has just closed, so the strategy never acts on an unfinished candle. Step 1 is the trend filter. The strategy compares the current value of the adaptive moving average with its value a few bars earlier, controlled by the SlopeLookback parameter, which defaults to 3. If the line is higher than it was 3 bars ago, that's an adaptive uptrend. If it's lower, that's an adaptive downtrend. Step 2 is the efficiency check. The strategy reads the efficiency ratio and compares it against the minimum efficiency setting, which defaults to 0.3. If the ratio is below that threshold, the trend is considered too weak or too choppy to be tradable, and the strategy simply stands aside. This is the filter that keeps it quiet in aimless markets. Step 3 is the pullback and reclaim, and this is the real signal. For a long, the just closed bar must dip down to or through the adaptive line, meaning its low reaches the line, and yet it must close back above the line. That combination describes a shallow pullback into the line followed by a recovery, which is the moment the strategy wants to join the trend. For a short, it's the exact mirror. The bar's high pushes up to or through the line, but the bar closes back below it. Step 4 is the momentum confirmation. For a long, the relative strength index must be above its midline of 50. For a short, it must be below 50. This ensures momentum is leaning the same way as the trade. When all 4 conditions line up, and provided there is no position already open under this strategy's magic number, an order is placed. Only one position is ever held at a time. Now for risk management, which is handled entirely by the average true range. The protective stop is set at the entry price, offset by the average true range multiplied by the stop multiplier, which defaults to 2. The profit target is set by the average true range multiplied by the target multiplier, which defaults to 3. With those defaults, the target is 1.5 times the distance of the stop, giving a reward-to-risk ratio of about 1.5 to 1. Because both are driven by volatility, The stop and target automatically widen in fast markets and tighten in calm ones. If the calculated stop is ever degenerate, the trade is skipped. Let's read through the actual MetaTrader code on screen. At the top are the inputs, which mirror the strategy's parameters. You can see the efficiency ratio and comma lookback set to 10, the fast and slow smoothing periods of 2 and 30, the slope lookback of 3, and the minimum efficiency of 0.3. Below those are the relative strength index period of 14 with its midline at 50, the average true range period, and the stop and target multipliers of 2 and 3. Now look at the two signal blocks. The long setup is true only when trend up holds, when the completed bar's low is at or below the adaptive line while its close is above the line, and when the relative strength index is above the midline. That's the pullback and reclaim in code. When that's true, the buy call runs. The stop is placed the average true range times 2 below entry. The target is the average true range times 3 above entry, and the order goes in with the common ATR long. The short setup, just underneath, is the exact mirror. Trend down must hold. The bar's high must reach up to or through the line, while the close finishes below it, and the relative strength index must be below the midline. The sell call then sets the stop above entry and the target below it, using the same 2 and 3 multiples, and sends the order. Both sides share one identical, symmetric risk model. Let's bring this to life on the chart. The blue line running through the candles is the adaptive moving average, and the panel below is the relative strength index, with its midline drawn at 50. Watch how the two work together. On the far left, the first few candles push steadily higher, and the blue line rises beneath them. Because these candles are traveling cleanly in one direction, the efficiency ratio is high, so the adaptive line is reacting quickly and sloping firmly upward. That satisfies the first two conditions, an adaptive uptrend and a trend efficient enough to clear the minimum threshold. Now look at the third candle. Price eases back and its low dips right down to the blue line, testing it. But by the close, the candle has recovered and finished back above the line. That is the pullback and reclaim the strategy is waiting for. In the panel below, the relative strength index is comfortably above the 50 midline, sitting in the momentum up zone, so momentum agrees. All four conditions align, and the buy entry marker appears. Notice the strategy did not chase the earlier candles higher. It waited patiently for price to come back to the line. Once long, the stop sits below entry at the average true range times 2, and the profit target sits above it at the average true range times 3, that reward to risk of roughly 1.5 to 1. Over the next candles, price resumes its climb. The blue line trails along underneath, and the market runs up into the take profit target on the sixth candle. The long idea is complete. Now the character of the market changes. Around the 7th and 8th candles, the rally stalls, and the adaptive line flattens and begins to roll over. Price starts making lower closes, and the blue line now slopes downward, so the trend filter has flipped to an adaptive downtrend. In the panel below, the relative strength index has dropped through the 50 midline into the momentum down zone. Watch the 12th candle in the sequence. Price bounces upward, and its high reaches back up to the descending blue line, but the candle closes back below it. That's the mirror image setup, a shallow pullback into the line within a downtrend, followed by a rejection back beneath it. With the relative strength index below the midline confirming downside momentum, the sell entry marker appears. Here the stop is placed above entry and the target below, using the same volatility-based distances. Price then rolls over and slides lower over the following candles, reaching the take profit target near the end of the chart. So across this single illustration, you've seen both halves of the strategy in action, a long, joined on a pullback into a rising adaptive line, and a short, joined on a rejection from a falling one. In both cases, the strategy waited for the trend, waited for the efficiency, waited for price to test the line, and only then asked momentum for a final nod. This is an illustration for educational purposes. Real markets are far messier, and losing trades are a normal part of any approach. And that brings us to the end of our look at the adaptive efficiency trend rider. We covered how Kaufman's adaptive moving average changes its own speed using the efficiency ratio, how the strategy waits for a pullback into that line and a reclaim, how the relative strength index confirms momentum, and how the average true range sets a symmetric stop and target. We also walk through both a long and a short example on the chart. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. Trading involves real risk, and losses do happen. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave your questions in the comments. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.